Good afternoon. Thank you so much for joining us today. This is the Empower Hour. I'm Evelyne Cohen with Living Great Real Estate. I am the broker, owner, and a realtor. Today's guest is Anthony Rosa, financial coach. His company is Fresh Start Advancement. We're going to be discussing a very, very tough and challenging topic today, obviously. Tough times require tough measures. Understanding credit history, validating debt and budgeting, basic overall financial questions and answers will be had today at this webinar. And I'm going to open it up right now. Anthony, hi, how are you? Thanks for joining us.
Hi, Evelyn. Thank you for having me.
Tell us a little bit about yourself, a little bit about your background, what you're going to be discussing with our guests today. Thank you.
Sure. So I'm a financial coach. I specialize in training on a one-on-one coaching platform where it allows, consumers and business owners to feel a little bit more confident and comfortable with their credit. Before that, I was a banker. I was a banker with PNC and Wells Fargo. And, I really enjoyed what I was doing, kind of working one-on-one already in the community, providing value around financial literacy. And, I created this program to kind of offset some of the feeling that I thought that would be able to help a lot of people in the community. So I left banking and I started this. And I've been a finance coach for about 5 years. I've seen well over 80,000 credit reporting pages, and I've assisted well over 2,000 individuals. I'm nationwide, and I do have some outreach international. And I'm really excited to be on to give some tips and tricks today.
Great. So have you found that you've had to make a pivotal shift in the way you are counseling people currently during COVID? And if so, what are some of those things that you could share with us right now?
I mean, yeah, of course. Right now with the payment deferment, the creditors really don't know how that's going to report to the credit report. The representatives from Experian, TransUnion, and Equifax really can't give you any direct information on how, as to if the account was forgiven or in forbearance or deferred, how that would actually look. So what I've been advising is to make sure you're monitoring your credit report. And if you have any accounts that, in fact, were put in deferment, you want to make sure that they're not reporting late.
So if they were put in deferment, that you shouldn't be late? Is that what I heard you say? I'm sorry.
A part of the CARES Act, there has been an arrangement of payment relief options. Mm-hmm. And for a lot of the accounts that were in deferment, such as mortgage or credit card or auto loan or auto insurance, they report the way they report. If they don't collect, they could report late. Although you were deferred or the payments were adjusted, you're still reporting late. And so a part of the CARES Act on the Consumer Financial Protection Bureau, CFPB, they're actually assisting us and enforcing creditors to make sure that they're not reporting history that would actually hurt our credit.
Right. That's interesting because I've had some of my own personal clients tell me that their credit reports are just all over the place with all kinds of erroneous information that they're not accustomed to seeing, and they're just trying to navigate the waters. They're not educated. So maybe a conversation with someone like you would be beneficial to them at this time.
I think this pitch deck that we're going to take a look today, I created to really, I want to say, bring to a level of understanding that it's easy to interpret. And so I'm hoping that after today, as it says here, with good credit, you can have the world in your hands. And I'm going to show you how to have good credit.
Great. Okay. Well, without further hesitation, unless anybody has a quick question or comment that they want to chime in, we're going to let Anthony have the floor.
Awesome. Well, thank you, Eve. Thank you, Alan. Thank you, Living Great. I do have my accountant friend, Luisa Nunez. She's in my BNI group. She'll be chiming in a little bit later on. talking about tax savings. So you want to make sure that you're tuning in throughout this whole presentation. Today, as we begin, I want to introduce myself again as a finance coach for those that are watching. My name is Anthony Rosa, and my ultimate goal is to inspire, connect, and educate you on how to have a healthy credit report. And we do that really by finding different ways on how we can improve your credit. So through my one-on-one coaching program, I would invite you all to reach out to me via email, as you can see there, freshstartadvancement@gmail.com, or you can visit my website just to take a look at more information. I know in today's day and age, we're always looking at websites. So take a look at my website, or you can call me directly on the business line, 201-870-0473. So with that said, like I said before, with good credit, you can have the world in your hands. Al, you can come down a little bit.
Oh, sure.
So what I want to transition into right now in this pitch deck is really understanding, the keys of credit. I think that to everything, there's a formula. And once you know the formula, you can create your foundation. Below here, it talks about the keys on having good credit. And a lot of times, people think that having credit cards or having too much credit is actually bad, when in fact, it's the opposite. Don't be scared to have credit. Credit can help you. You have to be responsible when you're creating these relationships. You have to make sure that you focus on a plan. You make sure that you understand the different credit elements. And if you have a credit card strategy, you will never skip a beat. So what does good credit look like? Now, there's different line items here broken down from very poor to exceptional. But what if I told you that even if you had very good credit, you would still get declined? Yes, in fact, the credit score, it shows you a score, but there's age behind it, there's history behind it, and if you're too new, then you're not going to be eligible for high limit cards or maybe a mortgage or auto loan right away. You might need someone to help you as an authorized user. For those that don't have a lot of credit, I recommend either a secured card or being added as an authorized user. Those are two easy ways on how you can establish credit. And I would highly recommend that you go to your bank, whether you go online, and you try to look at their credit card options and try to see if they have any credit builders. Sometimes banks do offer credit builders. So for those that are starting new or restarting, you need positive payment history. So positive payment history is one of the factors that is really important, and it creates over 30% of your credit score. You can come down a little bit. Now, in the Fresh Start Advancement, we provide a community that's passionate, determined, and supportive. And we understand that it's a credit journey. So as you're listening to me now, I've highlighted some reasons why you may need credit repair. And working with Eve and Al as agents, if you're especially on the market to buy a home, you have to be open and honest and real with yourself. And as you're transitioning your mindset from a rental to owner, I highly acknowledge that it's very rewarding. It can be an easy process if you have the right team, but you have to remember that when it comes to credit, it's really not what you think is credit. So if you've been declined for credit cards, if you're paying high interest rate, if you're thinking of purchasing a large credit, I would recommend you take a look at your credit. If you have a job opportunity, if you're starting a business, if you know that you have bad credit, how do you have bad credit? Well, I mean, if you have a low score, if you've seen it, if you have anything in collections, any judgments, things like that, and also, let me tell you something. If you're not using your cards, they can automatically close. So if you see number 9 here, they'll ask me, hey, why did this card close? And my score dropped. And then I'll take a look at the reporting history, and it'll tell me that it hasn't been used, there was no balance reported. And they say, I use the account sometimes, but not too often. Creditors can close the account at any time. In fact, if you have a high limit credit card, let's say 20,000, and you're carrying a high balance, let's say over 75%, you're making minimum payments, but most likely you're only covering interest. And I know you know this. And sometimes it's hard to get out of the debt. And I know this as well. But when it comes to having a credit card that's has a balance for a long period of time, it can actually, once you make a significant payment, let's say you make a big deal, you pay $15,000, or now it's under 10%, the bank can cut that account and they can cut your credit limit. I'm sure that's happened to you. And if you're watching this now, I would love for you to engage. Let me know some of these creditors that they've been closed. Let's see how you close that relationship. Let's see if we can reopen those relationships. Having credit limits high helps you. Cutting the limit hurts you. Okay? Over here, just kind of asks you to think and consider why you might need to hire a finance coach. I'm a finance coach. You've probably seen Lexington Law. You've probably seen FES agents, financial education services, and everybody has their own niche. I would like to think that the way that I created this program, it exceeds a lot of the expectations of the individuals and the business owners. And here are some reasons why you might need a finance coach. If you're really struggling to make ends meet, you're tired of being sick and tired, you need a change, but you don't know where to begin. I'm going to stop right there. Doing a budget plan is my foundation. If you don't know your numbers, there's a saying, if you fail to plan, you plan to fail. So I highly recommend that if you're struggling to make ends meet, write down a budget, find out where your total break even is. But I'm not talking about a budget, just your cell phone, your cable, your rent. I really want you to think about your expenses, the miscellaneous expenses, some of the personal habits, the haircut, the subscriptions. It all adds up, the going out to eat during the week, the ordering out on Friday after a long week. And I'll give you an example. I had a client, we were doing a budget plan. We found that it was a $3,700 break even. A break even is the total of all expenses. I'll talk a little bit about that later on. And so we did the break even. We did his income. We saw that he was generating over $5,200 a month. And so right there, I was able to say, well, can you see about $1,500 a month in savings? And he chuckled, he laughed and said, no, not really. But what we found was that he was able to take a deep breath. So moving on, if you're constantly stressed out, if you know right now that you want to improve your financial strategy and you appreciate having an accountability partner, I would love to be your accountability partner. And I would love to work with Ava, Al, and Luisa.
So let me just jump in for a second. So no matter where you are right now, obviously there's always a road and a path toward recovery. But the key to making sure that you've got the fundamental pieces in place and know what those next steps are. So you're providing some next steps. I guess in these times right now, it's imperative that people stay calm, use their stimulus checks wisely, pay off their credit cards as you're expanding on, repaying their retirement loans, considering a refi, which I'm sure you're suggesting to them and referring them to, qualified candidates. Also looking for investment buying opportunities if they have the means. You're obviously advising them on that, I would hope. And then, of course, insulating their finances, which is some of which you just spoke about, which is, trying to find those pockets of places where you can cut back on and, help create wealth that way, just by literally cutting things that aren't absolute essential to your day-to-day existence. So that's great information. I appreciate that. But go ahead, Anthony, keep going.
Yeah, so, I love this quote by Alexander the Great. There's nothing impossible to those who will try. And just like you said, Eve, we have to be calm right now. And, I'm going to take a moment to talk a little bit about the program, and I'm going to give you some high-level tips and tricks right now. So I highly recommend, if you're watching, get a piece of paper and pen and take notes, because like they say, note takers are money makers. And with everything going on, it's challenging to remember everything. And I'm sure you could watch this on the replay. So Fresh Start Advancement is broken down into a 4 to 6 month program. The first thing that we have to do is discuss the credit report. You have to discuss your credit report. Now, Credit Karma, Credit Sesame, FICO, these are different credit monitoring. Your credit card, Wells Fargo, Capital One, they have different credit trackers. So you want to be conscious and alert and aware of how to look at your credit report. So the first thing that we do is we set you up and subscribe you right away. We get a copy of your credit report. We dispute any derogatory items. Now, a part of the disputing process, write this down, the FCRA, Fair Credit Reporting Act, it protects us. And along with the Federal Trade Commission, and I referenced before the Consumer Financial Protection Bureau, these are agencies that you should know. And so as we're creating a personalized game plan, we want to validate the information. Now, I had a client that she was an authorized user on a Chase account. And now the Chase account was closed and it was in collections, but it was still in the charge-off section, and Chase Recovery was recovering. By the Fair Credit Reporting Act, as an authorized user, you're not held responsible for any balances on that account because you're not a primary or co-borrower. But Chase was kind of giving us a hard time, and they didn't want to remove her name from the report.
Why?
Well, they were just demanding a payment. They were saying that this account is not paid and we're not able to remove their name. And when I referenced, like, well, as an authorized user, she's not really held liable, they were like, yeah, you're right, but we still need to collect the payment. I said, no, you're not right. You're breaking her Fair Credit Reporting Act law. And so I was like, I told them this call is automated and recorded for all in purposes. And I'm going to put a complaint with the Consumer Financial Protection Bureau. And sure enough, this was a couple weeks ago. Last week, she told me that her name was removed. And I'm really excited to have a call later today with her actually to get a full update on the report. But it goes to show that, don't pay a collection right away. If you're validating an account, you want to make sure that they have full and accurate information. And you want to make sure that you're negotiating the right way. And you want to have someone negotiate for you. Okay? So during the first and second round, it's very important that we create a credit card strategy. We look at how we can get you a diversified or credit mix. Obviously, the budget plan, I reference is the foundation. So understanding your break even. And let me tell you something. A lot of times when you're on the market to buy and you don't really know your numbers, it's kind of hard to see what you would actually afford when you're going to go to buy. So you're saying I can do $1,800. I just did the budget plan. We just saved you $350 off subscriptions and cutting expenses. Now you went from $800 to $2,100. That's, I would assume, Eve, you can tell me a significant change in the amount of the financial purchase, the purchase price.
Absolutely. Their mortgage payment's a little higher. They're getting a little more for their spend, and everybody's happy, hopefully.
So knowing your numbers, right? So by month 3 and 4, guys, by 90 to 120 days, I use the term I want to teach you how to fish rather than give you a fish. So, I hope that you've been consistently planning and doing your budget plan, because the numbers that we're putting down are accrued. They're not your actual. And so when you're practicing this, you really have to put your numbers down. So what we're saying you're spending and what you're actually spending can be two different things. So the first 2 times we do the budget plan, it might be 80%, 90% accurate. But by month 3 and month 4, you would probably got a hang of it. Now you understand your financial need, right? Your health, right?
Financial health.
And so now you know what your mark is. So by 3 and 4, most of my clients are on a financial strategy. We've already deleted most items that we're able to delete right away. Whether we're negotiating, I'm trying to negotiate, for a very low threshold because I do debt recovery in my program as well. So my program starts from A to Z. We cover everything under the house, from the debt management to the collection validation to the representing them with attorneys. I had a client just today. The account, they're a little bit older, from 2005. They're judgments. And these judgments are past the statute of limitations. And when we called the attorneys, even the attorneys couldn't find it. So I'm going to give you a secret right here. This is worth a whole bunch of money right now. So thank even Al. But you want to get a warranty to satisfy. And this is public information, but obviously if you know how to do it, you get things done a lot faster, right? That's why you have accountability partners that can coach you and train you and get the results much faster. So if you have any judgments and they're open and you're thinking about a mortgage, I would probably consult with your agent and with the county clerk, get your DC or DJ number or your docket number, and you want to find out if there's any settlement options. You want to close that account right away, okay? And you don't close that going to the county clerk or the court. You go to the collector, okay? So in month 5 and month 6 is the final stretch. You should go from a student to a teacher by now, where here you're really seeing the ultimate push on your credit. I like to think of credit as like slow and steady, where I've had clients in the high 400s or low 500s that we went up 60 points right away. Then we went up 12, then we went up 8, then we went up 2, then we went up 24. And then by 4 to 6 months, we went, oh, wow, we were at a 450. Now we're at a 680, and it can happen just like that.
So you're saying, Anthony, you went up 60 points right away, but yet you're saying 6 to 8 months out. So
4 to 6 months.
Missing something?
I'm sorry?
I'm missing something. You're saying that, you went down 60 points with whatever program you were just referring to.
No, I wasn't. I was saying that I prefer slow and steady hits on the credit score.
Right.
So if someone's at a low level in the beginning, you're not going to go from a 450 to a 700 in one shot. But
Right.
You have to understand how the algorithm is that you can go up 60 points, you can go up 24 points, you can go up 8 points, you can go up 2 points, then you can go up another 24 points, depending on what you're doing on the account during the ongoing months.
Okay.
So credit is about slow and steady, and it's built in long term. So you have to have age and history. So if you have limited trade lines and you don't have enough positive payment history, you can have a 700 credit score with one credit card, but it doesn't mean you have good credit.
So wait a minute. So if somebody has an outstanding debt of X amount of thousands of dollars, they want to pay it off immediately to boost their score immediately. You're saying that that's not going to happen.
I would say that you want to keep a balance of under 10%, and you want to make sure that you're paying before the cycle reports. So you have to either A, look on your bill and find out when the billing cycle due date is, or you look on your credit report and it'll give you your balance reporting date. The balance reporting date is important because no matter where you are, if your due date is the 8th, but the reporting cycle is the 20th is what's the balance that's just going to report. So if you're thinking that you're going to make a payment before the 8th and today's the 20th and you're carrying a maxed out balance, but you have 2 weeks until you can make a payment, your credit is going to go down because your utilization went up. So you got to focus not only on the due date, but the cycle closing due date as well. You can go down now. So here, what you're seeing, everybody, is just kind of like a breakdown towards the financial freedom. With financial literacy, I like to inspire, connect, and educate all my members on understanding the terms. I think that once they understand the terms and who the credit reporting agencies are, in my one-on-one coaching program, they really get a strong feel. So you can take a look and you can continue down. What is break even? How to calculate your break even? I reference different types of credit, right? Establishing credit from a secured perspective by putting your money, and it allows, that history to report. You can come down.
Anthony, I just want to jump in. So would you recommend to homeowners with significant credit card debt, for example, to perhaps maybe a wise thing to do would be to use a home equity line of credit to pay off their balances.
Let me tell you something. I think that's a great idea because I had a client right now that we refinanced. He saved $300 a month by refinancing. He took out a home equity line of credit because you know, depending on lenders, you could take up to like 75%, and you know, depending on the mortgage status. But if you're eligible and you have equity and you could take out a line of credit, typically it's a better interest rate than what you're paying on your credit cards. I would highly recommend you take that money, you pay yourself from that money, reduce your debt. I think that's a great idea. And you can also save money. And also, depending on the interest rate, you might be saving on the interest rate. So, you know, speaking with Eve and Al, they're going to be able to kind of review that with you. And along with myself, a part of the power team, will be able to kind of make sure that we can see how much debt we can consolidate. You also have to take into consideration the interest that you're paying on each card. So if I have an Amex card, I have a $4,000 balance, I'm paying $80 in interest. My minimum payment is $120 a month. I'm paying $160. Still $80 is going to interest. So if I can figure out a way to reduce that, the monies that I was paying to that credit card, I want to snowball that payment and I want to dump that payment on my line of credit. So just because my line of credit minimum payment might be a little bit more economic and I can stretch it out, doesn't mean that when I did my budget plan, I already accustomed myself to paying Amex this amount. I'm going to pay the line of credit this amount and I'm going to dump the $80 extra so that you can consolidate and pay yourself out of debt much faster.
Okay.
Right here, guys, these are things you should know. You know, the disputes, when we dispute, it takes about 30 days. You should know your rights. I referenced the Federal Trade Commission and the Consumer Financial Protection Bureau. I referenced the Fair Credit Reporting Act. Right here, take note, is how to maintain a healthy credit history or report. And these are all the tools here. Monitoring your credit, having a credit mix, obviously doing the budget plan. You know, don't mess up. Let me tell you something. With how hard it is to build up your credit, it is very easily damaged. Having a high credit score, is not easy. And so if you have a high balance, your score could drop. If you pay late, your score could drop. If you're running your credit too much, your score could drop. If you're not monitoring your credit and a fraudulent account hits your account and you didn't catch it on time, your score could drop. So don't mess up.
So, Anthony, the CARES Act similarly relaxed the rules for retirement account withdrawals, allowing those age 59 and a half and younger who have been financially harmed by the coronavirus to take up to $100,000 from their retirement account in 2020 without incurring the standard 10% early distribution penalty. So how would that impact their credit if they wanted to use some of that money to pay down their credit cards, for example?
Well, you know, if they're looking into the retirement accounts to pay off their debt, I always take a look at the interest that I'm paying on it and does it make sense?
Mm-hmm.
And you have to think about, for every dollar you owe, you're paying something on that dollar. And if I can get myself out of debt now, catch up a little bit, have a financial strategy that I won't snowball into that quote unquote uncomfortable place again, then that interest you can save. So I'm all for thinking of the moment, but I'm also trying to think of the future. And they say, one of my coaches taught me, addition by subtraction. If I go 2 steps back, I'm hoping to go 4 or 5 steps forward. So me taking a look at any opportunities of withdrawing from a retirement account to consolidate debt to lower my utilization, to improve my score, to allow me to refinance my mortgage, then it's a domino effect. And at the end of the day, it makes sense. But you have to make sure that you have a plan in place.
Mm-hmm. Okay, good
You can
stuff.
slow down. So these are some testimonies. Last year we did over 232 members. I did over $1 million in business lending. We did over $250,000 in debt recovery. This year, you can imagine it was a little bit slow in March and in April, but significantly picked up in May, putting about 27 members on. June has been a downhill roller coaster with more referrals coming in. So there's a lot of action, there's a lot of activity. I think that it's a lot of people that are first to line. I have 2 clients right now that are under attorney review and 1 actually going into closing. So it can be done. Don't be scared. As long as you have a power team around you and you have the right people, and everybody's doing their part, then anything is possible. So don't let this pandemic slow you down or stop you. Don't let social distancing be a reason why you lose out an opportunity to change your life.
Great. Okay, Anthony, thank you very much. That was very informative. We're going to open it up to Q&A in a moment. But I just wanted to kind of preface the Q&A, and maybe this will kind of get people thinking a little bit. It is still a good time, though, obviously. Not is still, it is a good time, I should say, to look for bargains. Okay, so we have a lot of, where I sit anyway, I have a lot of investors that have been sitting on the sidelines for the last few years while the bull market raged, keeping a portion of their investable assets in cash while they waited for a good buying opportunity. So for those with disposable resources and the intestinal fortitude, this may be it. So if you're positioned properly from a financial standpoint, it may be a very good time to take advantage of the market downturn. Are you, Anthony, or Louisa, for that matter, who's a CPA? Thank you for joining us, Louisa. We've just shared our screen with her. Are you advising any of your clients that have a stronger health, shall we say, financial health, to go ahead and don't be fearful to, in fact, look for those bargains? Because 1, it'll obviously bring more money to you as their counsel, or 2, just obviously add value to your relationship with them, because you're giving them good advice to go ahead and look for those bargains right now, and perhaps even maybe point them in some directions of some of those bargains. Are you seeing any of that? Are you advising your clients to do any of that right now? I mean, at least I know I am.
Hi. Yes. Yes, of course. I mean, we all want to save. We all want to, we always looking for kind of like strategies, especially, for business owners. We are the ones out there working hard, right? And we don't want to pay that much in taxes. That's one of the things that we focus on at AMC, accounting professionals, where we come up, with strategies for tax savings purposes. And also what I have been helping our clients, business owners and self-employed, is applying for the PP loans.
Applying for what? I'm sorry?
The payroll protection program.
Yes.
Yes. So that's kind of, that has been part of the CARES Act.
Yes.
Just to help out business owners and self-employed.
So you're guiding them through, you're navigating them through those very convoluted waters right now on getting those SBA loans, or the different loans that are available right now. You're recommending that they do take advantage of some of those loan offerings right now because the interest rates are desirable. And then the second part of that would be, I would hope, you're advising them to go ahead and get strong again and go ahead and invest, on some of these bargain deals that are out there right now, because it will make them stand on their feet a little more solid right now if they feel they have made an investment that's going to make the difference for their financial wealth, perhaps 6 to 8 months down the road. While they're feeling a little vulnerable, they have that to look forward to. At least that's what I'm seeing. Some of my clients ask me, and trying to keep the optimism alive,
Right. Yes, definitely. Yeah.
Okay.
Can I ask a question, please?
Sure.
Anthony or Louisa, I know with the forbearance programs that the government is allowing now for your mortgages, where they let you not pay it for 3 months, some of them are letting it, or maybe Jeff could come in too, let you put it at the end of the term. They're also, some of the credit cards are giving you some forbearance where you don't have to pay your credit card off, or they don't charge you the interest, say, for 3 months. Does that show up on your report? Like, say you owe $3,000 now. Next month you owe 6,000. Following month you're up to $9,000, and you got to pay it all back now at one time. How does that come up on your credit report and all that?
Yeah, so Jeff, I know you can add to this, but if you are looking to refinance your home and you take that program, you're disqualifying yourself immediately from refinancing your mortgage. So if you're thinking of refinancing your mortgage, do not go into that forgiveness program. The way that it'll report on the credit report, it was paid as agreed. From what I'm seeing is it's just a check on the credit report. Doesn't show paid, but it just shows paid as agreed. Jeff, you want to add anything to that?
Is that the same for a mortgage as it is for the credit card? Say, Citibank lets you not pay for 3 months.
What I'm seeing, Al, from what I'm seeing on credit cards, they're showing late payments.
It is, even though the credit card company will tell you that it doesn't show up.
Even though they say that's what
I would imagine they just haven't gotten adapted as yet, that things are still very much in real time while people try to implement these new strategy systems and allowances.
But you can open up a dispute as an error, and by the Fair Credit Reporting Act, if it's reporting at an error, then they'll automatically really nicely go and apologize and reverse that for you.
Right, but you don't know unless you actually check the report. And then, you know what I mean? You think everything is fine and dandy unless they have somebody like Mr.
You know what they say when you assume, right?
Yes, right. So that could be troubling, because I had a couple of clients that did go into mortgage forbearance, and others were talking about credit card forbearance. And I'm saying, read the fine print, or at least don't just get an operator on the phone that says, yeah, everything is good. You really have to know the facts before you go through with that.
Yeah.
Incredible.
Okay. All right. So the coronavirus has threatened our healthcare system and economy like never before, leaving millions of American families struggling to pay all their bills. As we continue to practice safe social distancing and hope for medical progress to combat COVID-19, it helps to know that there are steps we take starting today, right now, to put our financial house back in order as quickly as possible. People like Anthony Rosa and Luisa Nunez and our special little guest over here, Jeff Greenberg, are all here to help you folks navigate these crazy uncharted waters and times. Everybody has to learn on the fly, and everybody's creating new systems on the fly. It's really imperative not to feel like you're dead in the water, but to ask a lot of questions, read the fine print, and get the help you need by the pros. I'm Eve Cohen, Living Great Real Estate. This has been your Empower Hour Tip of the Week. We look forward to having you join us each and every week. We want to thank very, very much our guests, Anthony Rosa and Luisa Nunez. And stay safe, stay empowered.